Let me ask you a question. Have you ever looked into stocks like Tesla, Amazon, or Nvidia and thought, man, I wish I could have bought those when they were cheap? The reality is, not everyone has thousands of dollars lying around to buy high-priced stocks. But here's the good news. You don't need to. Right now in 2025, there are affordable, high-growth stocks trading under $20 that have serious potential for the years ahead. And in this video, I'm going to share with you 3 of my favorite picks under $20 that you should definitely keep on your watch list. Now, before we jump into the stocks themselves, let's talk about why stocks under $20 are so exciting and what you need to look out for as an investor. Part 1. Why focus on stocks under $20? First, let's be real. Affordability matters. Not everyone watching this video has $500 or $1,000 to put into just one share of a company. Stocks under $20 are far more accessible. You can build a portfolio of multiple companies without needing huge amounts of money. But it's not just about being cheap. Some of the biggest winners in stock market history once traded under $20. Companies like Netflix, Apple, even Amazon at some point, they were low-priced stocks that grew into giants. That's why these kinds of opportunities can be exciting. Now, in 2025, the market is volatile. Inflation, interest rates, geopolitical issues, they've created ups and downs. But volatility also creates opportunity, especially in sectors like energy, biotech, and technology, where growth trends are strong and companies with smaller share prices can move up quickly if they execute well. So, in short, affordable, high-growth stocks under $20 give everyday investors a chance to participate in serious upside without needing a massive account balance. But, of course, you need to know how to pick the right ones. Key criteria for selecting high-growth stocks. Before I reveal the 3 stocks, let me walk you through the criteria I used to select them, because not every cheap stock is a good stock. Some are cheap for a reason, like struggling businesses or companies drowning in debt. We want to avoid those. Here's what I look at. Analyst ratings. I pay attention to Wall Street analyst ratings. If most analysts agree a stock is a buy or a strong buy, that's a good sign. Revenue and earnings growth. I want to see companies that are actually growing sales and moving closer to profitability. Market position. Does this company have an edge? Are they in a hot sector like AI, renewable energy, or biotech innovation? Valuation. Just because a stock is under $20 doesn't mean it's undervalued. I compare price to earnings ratios, fair value estimates, and growth potential. If a stock checks those boxes, then it gets my attention. Now, with that framework in mind, let's dive into the 3 specific stocks I think are worth watching in 2025. The 3 high-growth stocks under $20. Ivanhoe Mines, ticker IVPAF, price $8. First up, we've got Ivanhoe Mines. Now, I know what you're thinking. Mining? Isn't that kind of boring? But hear me out. Ivanhoe is a copper and critical materials company, and copper is absolutely essential for the future of renewable energy and electric vehicles. Every EV, every solar panel, every wind turbine, they all need copper, and demand for it is expected to skyrocket in the next decade. Ivanhoe has operations in Africa, particularly in resource-rich regions, which gives it access to some of the largest untapped copper reserves in the world. Their production costs are relatively low, and as copper prices rise, their profitability could expand massively. Right now, analysts rate Ivanhoe as a strong buy. The stock has a market cap around $10.5 billion and a P/E ratio of about 16, which is reasonable given the growth potential. Of course, there are risks. Commodity prices can swing, and mining in Africa comes with geopolitical uncertainty. But if you believe in the future of renewable energy and EV adoption, Ivanhoe Mines is positioned right at the heart of that growth story. And at just $8 a share, it's highly accessible. Artelo Biosciences, ticker ARTL, $9.53. Next on the list is Artelo Biosciences, a small but very interesting biotech company. Artelo is a clinical-stage biopharmaceutical company working on therapies that target lipid signaling pathways. Okay, that sounds super scientific, so let me put it in simple terms. They're developing drugs for cancer and metabolic diseases. Biotech is one of the most high-risk, high-reward sectors out there. A single successful clinical trial or FDA approval can send a stock soaring, and Artelo has some promising candidates in development. Here's what excites me. Wall Street analysts have a price target of $24 for this stock. That's a huge potential upside of 151% from where it is now. That doesn't mean it's guaranteed, but it shows the growth potential analysts see in this company. Now, let's be honest, there are risks. Like most biotechs, Artelo isn't profitable yet. Their P/E ratio is negative, which simply reflects the fact that they're still in the research and development phase. Clinical trials can fail, and drug approvals take time. But if you're comfortable with risk and you want exposure to the biotech space, Artelo Biosciences is a cheap ticket into a sector that could deliver massive rewards. Glencore, ticker GLNCY, price $7.87. Finally, let's talk about Glencore. Glencore is a diversified metals and mining company, but what makes it stand out is its global reach and integrated business model. Unlike Ivanhoe, which is more focused on copper, Glencore is involved in a wide range of commodities, from coal and oil to nickel and zinc. Plus, it has massive trading division. Basically, Glencore doesn't just mine resources, it also trades them worldwide, which gives it multiple streams of revenue. This makes it a bit more resilient to commodity cycles compared to smaller players. At a share price under $8, Glencore looks undervalued, especially considering its market cap of over $46 billion. Analysts also rate it a strong buy. Like Ivanhoe, it's exposed to commodity price swings. Plus, as a global player, it faces environmental and regulatory challenges, especially with governments cracking down on carbon emissions. But Glencore's size, balance sheet strength, and exposure to critical resources make it a solid pick for investors looking for growth at a low price point. Investment strategies for low-priced growth stocks. Now, before you go rushing out to buy these stocks, let's talk strategy. Investing in low-priced growth stocks is different from just buying an S&P 500 ETF. Here are a few tips. 1. Diversify. Don't put all your money into just one of these stocks. Spread your risk across multiple sectors. For example, you could buy some Ivanhoe for exposure to copper, Artelo for biotech, and Glencore for diversified mining. 2. Think long-term. These aren't get-rich-quick plays. With stocks like these, you need to be patient. Give them 3 to 5 years to see the growth story unfold. 3. Risk management. Only allocate a small percentage of your portfolio to these riskier picks. For example, no more than 5 to 10% in any single stock. And 4. Monitor closely. Keep an eye on earnings reports, analyst upgrades or downgrades, and industry news. With smaller stocks, things can change quickly. Risks and challenges. Of course, we can't ignore the risks. Stocks under $20 tend to be more volatile. They can swing 5, 10, or even 20% in a single day. That's exciting when they go up, but painful when they go down. Another issue is liquidity. Some of these stocks don't trade as heavily as big names like Apple or Microsoft. That means it might be harder to buy or sell large amounts without moving the price. And finally, market sentiment. Growth stocks are sensitive to interest rates and macroeconomic conditions. If rates stay high or the economy slows, these stocks could face pressure. So yes, the upside is big, but you need to go in with your eyes open. As we wrap up, remember, affordable doesn't mean weak. Some of the best opportunities in 2025 are trading under $20. Ivanhoe Mines gives you exposure to clean energy metals, Artelo Biosciences puts you at the heart of biotech innovation, and Glencore brings the stability of a global resource leader. If you're starting or working with limited capital, these are 3 names worth watching. But always research, manage your risk, and stay patient, because the real rewards in investing come over years, not weeks. If you found this breakdown helpful, make sure to hit that like button, subscribe to Elite Trade Club, and turn on the bell so you never miss a video. I'd love to hear from you too. Which of these 3 stocks would you add to your watch list? Drop a comment below, and let's talk about it. Thanks for watching. I'll see you in the next video.